Good afternoon and welcome to Join the Dots. Now we're Sunday here, so I haven't seen how the market opened Monday. You'll be seeing this video Monday. So things may have happened, things may not have happened. A little quick run through a few things before we go into the main body of this episode. Von Great's short, I will link it, okay? All investment, and this is just repeating what we said, but someone said on the comments the other day, you know, you're just saying the same thing every day. No, I'm not. It's because you're not listening, honestly, because I'm not saying the same thing every day. However, the things I am saying rhyme every day because there's a core, massive core development that can't be avoided and will happen. And so I will come at it from various different things. I spent the first 3 months of this service trying to put into the system, put into your minds, put into everyone's minds, the macro will drive everything. So stop looking at the micro. Stop it, because you're going to get distracted. And I will continue to stress the macro. And so that might sound the same, but it's not. It's only sounding the same to those who aren't listening for the very neat and important differences between the angles we're coming at here. Okay? So the Von Greit short, it just confirms everything we said last week, wasn't it? Banks have changed their entire outlook, investment banks, on portfolio construction, which means that they're all now going to go out to all their agencies, all their independent financial advisors they use, all their own in-house advisors, and they're going to say, we need to restructure portfolios to have 20% gold. How do you do that when there's no spare gold? There's only one thing that can give, and that's the price. The price has to move up to flush out enough gold for you and all these investors who have sat there totally ignorant of what's happening in gold because they've been sold equities, okay? They now need to get up to 20% gold. The only thing that can give is the price, okay? The only thing. So, what else have we got? We got a second thing. I saw an article, and I didn't retain it, so I haven't got it to link, but it said that scrap dealers are not seeing public gold. I had one or two questions about the bullion queues that we saw in Australia, and they were Vietnam as well and Thailand. Well, are they selling? No, they're not. The scrap dealers are not getting a lot of gold sent to them to reprocess. Okay, but I can't quote that. I can quote it, but I can't find it, I'm afraid. The third piece, and I was going to do all this piece today on a guy called Michael Howell, Howell. And it's so important because it's all about liquidity. And what I've said to you, probably for the last month, is everything is going to be about liquidity. Doesn't matter what the values are, it's what liquidity there is to support them looking forwards, not looking backwards. Data is useless when you're looking forwards and trying to say, well, how much liquidity will there be? And so Michael Howell's piece is absolutely superb. We will cover that tomorrow because I did promise you today that I would finish off my review of Ed Dowd's piece. And when I listened to it again and again and again, I thought, no, I've got to finish that. This is so important. Okay. So Michael Howell tomorrow, he used to be a research director at Salomons. He's written a book called Capital Wars, and he wrote that in 2020. Okay, and that's a very big year, isn't it, 2020? A lot happened that year. And Capital Wars, yeah. You can go on to his Substack if you want, Michael Howell, Howell. Go on to his Substack if you want, and you can find out before we cover his piece tomorrow. And then I saw a little short with Rick Rule, and I love it. Because again, these things keep rhyming. What have I said since the start? I want the truth. You can't base decisions, investment decisions, your critical investment decisions on lies or narrative. What does Rick Rule say? Looking for the truth in a world lost in narrative. Absolutely right. Absolutely right. This world has been taken down a very evil route of narrative over truth, narrative over fact, narrative over everything. And of course, what happened in 2020 was an acceleration of that process by 100 times. It was subtle, it was happening. But in 2020, suddenly, the truth was irrelevant, the science was irrelevant, everything was irrelevant except the narrative. And the media, never to be trusted again in my world, never to be trusted again, just repeated the narrative time and time and time and time again, and censored and cancelled and blocked any truth. So this has all got ramifications. It's all got colossal ramifications for the world and for what we're going to go through. All right, so back to Ed Dowd in China, because I wanted to finish this. We got to about 18 minutes of his piece when I went through it on, I think it was Saturday or Sunday. You would have seen it Sunday. And we got to about 18 minutes. And then we talked about Chinese demographics. The Chinese demographics started to fall very badly in 2020. There's that date again. Don't forget it. And so Chinese demand collapsed, property demand collapsed. What did I say? I've said Chinese property has been in a 5-year slump, and it's getting worse, not better, worse. So Evergrande was just a huge canary, rather like, I don't know, rather like other canaries we've seen in the past. It's just the canary that came to the top, and everyone thought, sort out Evergrande, the whole thing will go away. No, it was the first of hundreds of collapses of property development companies, construction companies, property owner companies, landlords, etc., etc., etc. Okay. Now, the trouble with China is its whole political system has to focus on employment. It has to, because otherwise it would have a revolution. Okay, if you would have 200-300 million unemployed, you'd have a revolution. So the CCP mindset is always to concentrate on employment. And that's why you had the property boom. That's why you've got 120 EV factories. That's why you've got trains going 100 million miles an hour to nowhere, and over bridges that span massive gorges and look so impressive but produce nothing. No productivity increase, no cash flows, nothing. Just a waste of money, capital allocation, misallocation, gone forever. And you have to pay for that at some point. And we're coming to that point. Okay? So, they had a property crisis. Now, Ed has got, and I think, where is it he said? Yes, he has produced a 120-page report on why China's property crisis will be a collapse in 26. I've said it for 5 years, so. But he's producing a 120-page report on this. And so he wasn't going to talk about it in this interview, because that's a lot of his intellectual property, isn't it? It's his value. He's done all that research, he's going to release it, and he's going to get paid for it. And we'll pick it up as it comes out, but I've told you anyway. I've told you there's going to be a collapse. The whole thing is collapsing, just collapsing, okay? Don't even think about 5%, 10%, think collapse. Okay. So that is going to produce a massive deflationary scare in China, and it will. And the bond rates have collapsed already, and we know that. I mean, they're 30 years just over 2, they're 10 years under 2. What's the American rates? Okay, what are other country rates? What's the Japanese rate? The Japanese rate is now over 3, and the Chinese is just over 2. Wow. Think back a few years, Japan was almost 0. China was 4 or 5. Yes, China is very much showing signs of the Japanese end of 80s collapse. And remember, the Nikkei at that point was just edging 40,000, I think it's 39 something, and it ended up down at 8. And it's only just recovered the 40,000 that it had in the end of the 80s in the 2020s, 40 years later, because they've got a population problem. They had an overinvestment problem. They had a property crisis. I remember when I was working, I think it was at NatWest, and the Lex column in the FT, one of my jobs was to read the Lex column because it always contained 5 or 6 very key stories. And it said that the Emperor's Palace in Tokyo was valued, this was right at the end of the 80s, was valued at more than the whole of Manhattan. Think about that. That's how stupid it got. Equities were trading at 300 times earnings. Oh, hold on. Where's AI at the moment? Yeah, 300 times earnings they were trading at. Just collapsed. It's why you've got fantastic Japanese cars though, because so much money was invested in the research and development that Honda, Toyota, etc. have produced wonderful cars ever since. But that massive capital misallocation or overinvestment caused crises across the economy. Okay, so this is where China's heading. It really is. Can they export their way out? No, is what Ed says. Well, of course they can't, because no one wants their exports, do they? They're going to start restricting them because their economy is slowing down. So the only thing that China's got left is exports. Huh? They're not going to export because people are going to put tariffs, sanctions, they're going to block things. They can't take on all these cars and solar and everything from China and expect to have their own industry working. There's a catch-22 there, an obvious one. Okay, gold, he goes on to after 22 minutes, he says that he saw 6 months ago, he saw technicals saying that gold would reach 4,000. By 2030, the technicals say 10,000. I think that's very low bull. I really do think that's very low bull. He thinks gold might stick in a trading range now for 3, and he says up to 12 months, but it should be in any and every portfolio. Fine. Okay. And what he says, and this is great, he says that we all know that there's a new financial system coming. We all know that. Okay. And when you get onto Michael Howell tomorrow, when I get onto it and we talk about it, exactly the same thing. And they say exactly the same thing. Some of it will be backed by gold, and some of it, and there'll be a lot more detail on this tomorrow in Michael Howell piece, okay, will be backed by treasuries and stable coins. And that's what I've always seen and what I've always said to you. There is a race to a new financial system, East versus West, crypto versus precious metals. It's that obvious. It's a 2-horse race, and we may have a dead heat. They may both put in systems, or there may only be one system. But what we're going to see is chaos as they get towards that end goal. Again, another thing I've said, and I love this because I only read the rest of this report today. Ed says oil, $25 to $35. Absolutely. I've said it so many times. We're going to have a structural recession depression in production. So why would oil be sitting at 60, 70? Now, he saw this when oil was 75 in January. And he said down to 25 then, 25 to 35. And he said, won't stay there long because obviously low prices cause less production, causes prices to rise. Like high prices cause more production, prices to fall. It's the way it works in cycles. But as he said, he saw this at $75 and now it's 58. So he's already halfway there, well, a third of the way there, okay? He talks about First Brands, he talks about Zions. Is there going to be a banking crash? He doesn't actually think so. He doesn't think so. But we are now at the bad credit part of the cycle, okay? We are now at the bad credit part. And to me, I think there is so much bad credit out there. I think we are going to see an almighty wipeout of almost industries and therefore banks. So I go a long way with Ed. I see an awful lot of the same things as him, and that's wonderful because he's a very, very solid, sound analyst, proven, 10 years with BlackRock, saw everything I saw in COVID, all the insurance numbers didn't make sense given what people were telling us. In other words, go back to Rick Rule, I'm looking for the truth, which is lost in a world of narrative. Thank you very much.